I know a lot of you guys were concerned about this, so here we go. Wells Fargo will cancel all existing personal lines of credit and will no longer offer new ones. This means that the revolving lines of credit that may have allowed some of you to borrow $3 to $100,000 are no more. Definitely a big hit to people who use that money to pay off credit card debt, fund home improvement projects, or even replace overdrawn funds, among other uses. If you have a personal line of credit with Wells Fargo or any other bank, or if you're just looking for ways to boost your credit score, then listen up because this news will definitely affect you. The bright side is that you have options going forward, and that is also part of this video today. So strap yourself up for today's video on Wells Fargo closing their credit lines and the 3 best ways to boost your credit score right now. Just a very quick and big thank you as usual for always lighting up the like button and making my day. I really appreciate the support, you guys. Your likes, your shares, and your comments, they really help the channel out. So I just want to thank you guys so much, and let's go ahead and jump right in. In a 6-page letter to customers, Wells Fargo shared their final decision to discontinue personal lines of credit, to simplify product offerings, and to focus on credit cards and personal loans. This is just the latest product offering among many that the bank has cut lately. Wells Fargo halted home equity loans in 2020 and said it would stop providing auto loans to independent dealerships. There was also some controversy about Wells Fargo employees creating fake bank accounts to meet sales goals. They're still paying settlements up until now for that one. If you have a credit line with Wells Fargo, expect a 60-day notice before the personal line of credit is canceled. I just want to give you guys a heads up on this one. Once it closes, your remaining balance will have minimum monthly payments and a fixed interest rate. The minimum payment will be 1% of your remaining balance or $25, whichever is higher. The bank has yet to announce what the average fixed interest rate will be. So what does this mean, guys? Well, first, you can expect your credit score to take a big hit, and that has to do with your credit utilization ratio or the percentage of the total credit that you're using. Your credit utilization makes up around 30% of your credit profile, and that number is definitely going to be going up with the less credit that is available to you with Wells Fargo closing their credit lines. You see how this is going to impact your credit score now? To show you what I mean a little bit further, maybe your only existing line of credit is one with Wells Fargo. It has a limit of $20,000 and you've used $5,000 of this limit for a home improvement project. You currently have a credit utilization ratio of 25%, but once the account closes, you'll have a ratio of 100%. There's also the fact that closing an account also reduces your number of accounts and the average age of those accounts, which will also ding your credit score. Couple that with a high debt balance and your credit may be in some serious trouble, guys. Now, here's what you can do if your credit line is in trouble. First, look for other credit lines. Many other financial institutions offer personal lines of credit, including banks, credit unions, and online lenders. You can check out Wells Fargo's competitors like PNC Bank, Pentagon Federal Credit Union, US Bank, SunTrust, even Bank of America for that matter. It's better if you shop around with lenders to find the best rates and terms. Personal lines of credit are good because they allow you to borrow money repeatedly up to a set limit, and then you can repay a portion of the current balance through regular payments. You have other options though. Credit cards are also another form of revolving credit lines. They just have a lower credit limit generally compared to personal lines of credit. A credit card may actually be a good choice if you qualify for a perk like interest-free payments for a designated amount of time, and this could give you that wiggle room that you need to be able to pay off some debts without the added costs and fees. Personal loans are another option. They come as a lump sum payment, then you repay them with a fixed interest rate. As long as you're consistent with your payments, there really shouldn't be very much difference with your credit score with a personal loan compared to a line of credit. A personal loan may be a good option if you know how much money that you'll need up front and are comfortable with a steady repayment schedule. Now, it may also be a very good idea to boost your credit score even further. The good news here is that the lower a person's score, the more likely they are to achieve a 100-point increase. That's thanks to the big upside that you have, where even smaller changes can result in greater credit score increases. So that 100-point difference in your credit scores could mean more access to loans or credit cards at even better terms and lower interest rates. Now, on the other end of the line, if you're starting from a higher credit score, then you likely don't need a full 100 points to make a big difference in the credit products that you get. But still, our information could still be a very good refresher for you to brush up on your credit score foundation. But here are 3 of the best ways to boost your credit score. All right, number 1 is a no-brainer: pay your bills on time. A big part of your credit score is your payments. In fact, payment history is the single biggest factor that affects your credit scores, and late payments can stay on your credit report for 7.5 years. Now, if you miss a payment by 30 days or more, call the creditor immediately. Arrange to pay up if you can and ask if the creditor will consider no longer reporting the missed payment to the credit bureaus. You can actually ask them for this to happen. Even if the creditor won't do this, it is definitely worth getting current on the account ASAP. Every month an account is marked delinquent, it hurts your score more and more. Fortunately, the impact of a missed payment fades over time, so at least that part's good. Showing lots of positive credit behaviors after a misstep can definitely help offset the damage more quickly and eventually improve your credit. If you're simply not able to pay everything on time, know how to prioritize your bills. And since you're on our channel, there's also a lot of government stimulus out there to help you guys with your bills. Just check out my other videos to help you guys get started. All right, second way to boost your credit score, make frequent payments. Now remember what I said about credit utilization ratio? Well, you can lower that number and boost your credit score just by paying more frequently. If you can manage those micro payments throughout the month, that can definitely help your credit card balances move downward and improve your credit. This should definitely benefit your credit score right away. And also by doing this, you would never, ever have another late payment. All right, third way to boost your credit score is to ask for higher credit limits. Now, if you can't move the needle at the bottom, then raise your credit ceiling. When your credit limit goes up and your balance stays the same, it instantly lowers your credit utilization, which can improve your credit almost immediately. All you gotta do is call your credit card issuer and ask them if you can get a higher limit without a hard credit inquiry. Watch out for that one especially, because if you do a hard inquiry, you may actually drop a couple of points. Now, of course, if you don't need your credit score to jump up immediately, it may actually be worth it in the long term. Maybe you take an initial upfront credit hit from the hard inquiry, but with the credit line increase, you could benefit in a couple of months. If your income has gone up or you've added more years of positive credit experience, you may actually have a very decent shot of getting a higher limit. And during this, banks and financial institutions are just itching for more customers to do so, so you'll definitely be welcome. That's also the leverage that you need for a good deal, so make sure you point that out the next time you're shopping around. Wells Fargo closing their credit lines is definitely bad news for the average consumer, but if you take advantage of the right steps, you and your credit score should be safe here. But let me know if you have any questions, and if you're interested in more content like this on our channel, drop me a comment down below and I'll get to you guys as soon as I can. Also, show some love for the channel by joining the membership program. The join button's right there, just one click away. So anyway, guys, that's all for your daily news and the finance side of things. We covered Wells Fargo closing their credit lines for good, plus the 3 ways to boost your credit score right now. As always, I just want to thank you guys for always liking the videos. I really appreciate the love and the support. Definitely subscribe to the channel if you haven't already. Be sure to hit that notification bell, that way you're notified as soon as I release new videos and content. And I'll see you guys on the next one. Take care, and you guys on